Investments in securities are subject to market risks. Read all related documents carefully before investing.
Hello and welcome to the Weekend Investing Daily Bytes. We're shooting this episode on 19th of May. And the market, although did go down in the initial part of the day, but recovered very smartly back from the support level here of around 18050. So we now have, one, two, and three supports on this level. Uh, so far, so good. So, I mean, we are just 250 points away from the recent high, so not so bad. The worry may start if we were to create this right shoulder and go down. If that happens, then maybe we'll be saying goodbye to all-time highs for a few months. So let's hope that the market does not fall and go below 1850, 18050, because in that case, we are then looking at 17650, 17600 type of levels likely. But if this were to continue to recover and above 18300, then it will be a very strong candidate to start going up again. So again, depends upon how the momentum will pick in the coming days, next week actually. Uh, Markets overall, IT stocks, auto stocks, some banks, Adani stocks in particular. So there was a outcome of the SEBI report which has not found Adani Group stocks to have violated, uh, you know, have not found much violations. That's what I've cursorily read. And all Adani stocks were up after that. And deeper studies will be required, but that will come, in due course of time. So in the middle of that period, there is relief, and it may also give relief to the entire market. Actually, if you recall, Adani saga caused markets to collapse in February end, and that recovery from that bottom has taken quite a bit of time. And with Adani overhang for now getting over, maybe this will be the required trigger that will take us up again. Um, we had some good results from ITC and State Bank yesterday, but both fell yesterday. Today they were both flat. Tata Motors had a bad news regarding cancellation of an order, but it still went up. So, expectations and how stocks are moving versus what is the news on ground can be very, very confusing at times. Uh, Sectoral overview, as I said, IT stocks up 1.5% today, real estate coming back 0.9%, auto stocks 0.7%. So if you notice, there's a pattern every time, market picks up, real estate and auto are the first ones to go up. Today IT also, but you can see that real estate and auto in the last 1 month also are the top two or three positions here. And over the last 3 months also, real estate has done well and autos also have done reasonably all right. The only sector that lost big today was pharma and public sector enterprise. FMCG was flat and rest were just filling the gaps here. Mid cap index, which had slid down to 32, 200 odd, came back up very nicely. So, sort of a very hammer like pattern here. If this high 32, 600 gets broken in coming days and goes up, it will be a good hammer and should then go to a new high. Small caps very remarkably has taken support on this trend line again and gone back. So nothing damaged here really. I mean, we've not lost actually. We've lost maybe 20, 30, 40 points from its recent highest closing. So no loss really on this front. So small caps also looking good, and Nifty Bank has also climbed back, respecting this support line, and again very near all-time high. So I won't be surprised next week if there is a relief rally and and the momentum continues that we go to recent highs again. So today we will talk about several sectors that have done well recently: FMCG and public sector enterprise, uh, more in the very recent past. But if you see this chart, this is a sectoral ranking chart where, uh, and also let me just before I get into this, call for questions if you have any. Last 5 minutes of today's video I'll dedicate it to your questions. If you have any question about any chart, you can ask me. I'll try to open up the chart and give you my opinion on that. Um so please type in your questions on the comment box. So this is a sectoral momentum ranking table. Of course, for weekend investing strategies which are running on autopilot and rule-based systems where everything is self-correcting, self-healing, self-decision making is there. We don't use any discretion there. But in case you are having a discretionary outlook towards the market, you could use such tables where you are able to study how the momentum is changing for one sector or the other. In momentum strategies, the nice thing is that the sectors get decided which sectors we are going to invest in on their own. So, sectors that are losing momentum automatically get out, sectors that are in momentum automatically come in. So on in momentum strategies, we are not worried about how to select the sectors, but in discretionary investing, you could use such tables. So what this table is saying is that for each of these periods, uh, on a 1 month basis, 3 month basis, 6 months, 9 months, and 12 months basis, where does each sector stand? And we are calculating some sectors and some indices within this table. And you can see that PSU banking, which over the last 12 months and 9 months has done well, in the very short term has not done so well. Autos, which was down over 3 months in the middle of the pack, has come back very strongly. FMCG has remained in the top few ranks all through the year. So if something remains all through green or all through pink, it means that it is extremely strong or extremely weak. So just by looking at this chart, you can say FMCG, PSE, banking, real estate, um, have been quite strong. Autos also, mostly green, mostly pink, media, metals, pharma, IT, energy stocks, commodity stocks, somewhat infra also have been weak and have remained weak. So what inference you can draw from here is in as sectors go from pink towards green, as more and more green is available on on the table, and the ranking starts to move up in terms of numbers. So one being the best, highest rank, and 17 being the lowest or 18 being the lowest. So you can see that pharma, for instance, has remained in the 13 to 18 bracket. Metals have remained in 14 to 16. Media has remained in 17 and 18 only. Commodities also 12, 13, 14. Energy stocks also barring 3 months all down. So there is a reasonable idea you can get about sectors as to where they are and how they are performing. But if something ranks are coming down with each month, then that is showing you a very very strong picture about that segment. So in the very very short term, autos, FMCG, real estate, consumption stocks, public sector enterprises, these are the stocks that have been gaining momentum in the last 1 month, and some of them are also gaining momentum over 3 months. So that itself tells you where is the short term momentum in the markets. So I'll take up the questions now. If you have any questions, please write in the comment box. I'll share the screen for uh, 1 second for my charts. Just give me 1 second. Yeah, here it is. Okay, let me just Go to my questions panel. Okay. One guest question says real estate seems positive. However, Sobha Limited is going down in spite of good projections. So let's look at Sobha Limited. So Sobha is, and let's also look at, let's look at a longer term chart of Sobha. And you can see that even a very long term 200 week moving average uh, chart, the stock just stands at 200 week moving average. So that is, you know, really the stock has done nothing in the last 6 years. And if we superimpose the real estate index on it, so let's superimpose the index and align both of them. You can see that since January 22, uh, Sobha has been, going away from the trend of the uh, index. So let's also put in some other real estate stocks here, um, and also let's put Oberoi. Oberoi Reality is really, really gunning hard, doing well. Let's go in a shorter term period here. Let's say uh, post COVID, for instance. Let's just take the post COVID period. So post-COVID period, Sobha has had led the entire pack by by a wide margin in the period of 2021 to 2022, and that is what is normalizing now. So over a larger period, you can see that it is not so much off from other entities, but in the very short term, let's say if we go to a daily chart, and if we see the last 1 year, for instance, then of course, yes, Soba has this dark blue line has come off from the general trend. Uh, and given that it did lead at some point of time, it may so happen that it will do that again. But given the fact that it is nowhere near its 200 DMA also, I would wait for some correction of this downward trend to happen. At least stocks should start to move above the 200 moving average, and then some pivotal breakout somewhere that will determine where. So the setup is not there for going long. If you are already long in it, I guess you could use some stops at some point. Maybe say 425 is a good stop. Below this, it will definitely be underperforming even more. So I think that is what I would think about Soba. Mr. Pramod Kumar has a question: is investment is gold ETF better than physical gold and SGB? So good question. A lot of people have this question. Gold's primary property is that there is no counterparty risk to gold. So that is only physical gold. If you have the gold in your hand, that is yours. Otherwise, if you have it in a demat account, there is a counterparty there, and there is some risk added to it. Or if you are holding a ETF or a mutual fund or SGB, there is a counterparty. So SGB with sovereign being the counterparty, that is the least risky paper, I would think. With an ETF, that is the most efficient form of gold paper after SGB, and gold mutual funds probably are the last in that series. And digital gold, I think, is even lower because a lot of counterparty risk is there. So this is my take on that. Even on the cost basis, I think uh, gold gold mutual funds probably have the most cost, versus gold ETFs will have lesser cost, and SGBs, of course, pay you interest on top of your holding with no capital gains also. And physical, of course, there will be some cost of holding and GST payable, etc. So my preference is to have a combination of these, not necessarily only one of them. But the primary function of gold is to not have counterparty risk. Views on Anshu has this question, views on SBI compared to HDFC Bank. So I don't think they are comparable as such. They are in very different uh, they are leaders of their own segments. Whether it is private banking or whether it is PSU banking. So uh, both have done well. Both have, uh, you know, So if we see very long term chart, you will find that State Bank is nowhere near what HDFC Bank has done. HDFC Bank is up 2,000% since the last 15 years. State Bank is up 600%. But what is very interesting is that since COVID, uh, the action in public sector banks have been much more than private banks, and there is a lot of emphasis from the government. Let's see where we are in terms of post COVID. So post COVID, HDFC Bank has done 100% gain. State Bank has done 227% gain. So I think uh, between the two, my preference would be still, I think, State Bank of India. I think there's a lot of catch up to do by State Bank of India. But then again, HDFC has its own charm, and they are able to deliver a very robust growth every on year basis. So I mean, why not have both if you are interested in in banks only? Uh, Next question is from Ankita Ghosh. We are missing stocks for the day in your session. So, stocks for the day could be Tata Motor today. So I'll share some chart with you. So Tata Motors long-term chart is extremely positive. It is. Let me remove HDFC Bank here. What you can see here that this, while this is a very long-term chart, it is sort of breaking out of this this entire formation that it has had over the last many years. And very recently, it did go to a 52-week high, and it broke out from there. Let me just refresh this chart. So this was the big move that happened 280 to about 500 odd in 2021, and then we went into this consolidation, and there we broke out again at 460. So this, I think, is very bullish chart. It has come back and also taken support and started to go up. So I think Tata Motors is looking quite good, and this is the chart of the day for me. Also, there was some negative news on some order cancellation of large order cancellation, but the stock has taken support and gone back up, so it's looking extremely bullish to me. Dilip Singh has a question. Is it the right time to invest in Tata Motors? Should one wait? So I think the answer for me is that one should invest in it with some stops. Right now, that stop could be for very short term trades or short term positions, could be about 500 rupees. But I think this is heading towards much higher. That's what the chart is kind of suggesting here. Hindalco is the next query from Rohan. So if we look at Hindalco's chart, it's kind of, commodities overall are a bit of a sulk, but we are very near support level. So it would be, I think, prudent to, if you want to buy Hindalco, you can buy it at near 400 rupee levels and have a very tight stop at 380, and then look at it in a short to medium term way, and target 500 if it does take the support and go up. So it's a low risk trade that is possible here, but if it breaks down from here, then of course all bets are off, because then we risk coming to this bottom again. Thank you so much. So I will close this session now. I'm also running out of time. But what we'll try to do is every Friday we'll do a chart check like this, and invite queries on whichever chart you wish to look at. and we can do this on a regular basis. Thank you so much. Bye.